Hello everybody, Randy Patrick here. Welcome to another Housing Bubble 2.0 News of the Week video, or as I like to call it, another episode of As the Housing Market Turns. Today is actually Tuesday, July the 30th. Yes, it's another back-to-back video here. Very important because today was another significant release of information day, so I obviously feel compelled to do a video because that's what I like to do. So anyway, if you're new to our channel, realize that we talk about the housing market, the real estate market, prices, issues, stuff going on, how we can help you as a buyer, seller, investor, etc. So if you're not already a subscriber, please hit the subscribe button, and I certainly appreciate that. And hopefully we'll give you lots of information that you can utilize in your housing endeavors. All right, so today we are going to talk about Case-Shiller data that was released this morning. Also, pending home sales data was released by NAR, and rental rates. But also, if you'd like more information on, as I said, buying, selling, real estate investing, distressed property, short sales, pre-foreclosures, whatever that may be, please reach out to me. Hit me up on my email. You'll find my email in the top comment section here in the video, and just give me a shout and we'll connect and we'll have a chat and we'll see what we can do to help you guys out. So anyway, thank you. So big news of today, of course, is this is the Case-Shiller. So the S&P, CoreLogic S&P U.S. Housing Home Price Index was released today, and this is it's the Case-Shiller stuff, so it's obviously important. And just so you know, this is for May's data. Now, Case-Shiller data is usually trailing up by a couple of months because of how they calculate their index. So just realize that they use a couple of months data to sort of formulate the release data for the current month. So current month is May, and I guess you could say that the point being, data released today for May 2019 shows that the rate of home price increases across the U.S. has continued to slow. We know that. I guess you could say the National Home Price Index reported a 3.4% gain in May, which is down from 3.5% the previous month. So we're just seeing it creep down very slowly. That's the national composite. They have a 10-city and a 20-city. The 10-city composite increase came in at 2.2%, and the 20-city composite posted a 2.4% price index. So we're still seeing overall increases in home price values, but it's slowing down big time now. Now, of course, we always have winners of the day, as you could say. Las Vegas, Phoenix, and Tampa reported the highest year-over-year increases among the 20 cities. In May, Vegas led the way with a 6.4% increase. And again, I'm talking year-over-year price increase here, followed by Phoenix with a 5.7% increase, and Tampa with a 5.1% increase. So that's the scoop on that. Now, realize that the gains are shrinking, but today we saw something actually kind of interesting. And today in the release, there was one city who actually had a year-over-year price decrease. And if you can guess who that city was, it was Seattle, Washington. So this is our first city to go negative on the Case-Shiller Index in a number of years. So I think this actually is somewhat significant. That's why I thought it was important to talk about it today. And again, we've seen appreciation, we've seen a plateau, we're seeing, as they call it, deceleration of appreciation. So it's the annual appreciation is getting smaller and smaller and smaller. And we finally saw the first one that went below the year over year. So it's negative 1.2%. Now, again, in the whole scope of things, the increases are small, the decrease is small. Okay, is it a big deal? Maybe not at this point in time, but it's the start of something. It's the start of a city who's had very, very high appreciation over the past couple of years suddenly go, okay, we're not doing that anymore, and we're going the other way now. So this is kind of interesting. And realize, though, that this is still May's data. Obviously, we will probably see some appreciation still over the summer months for the majority of the cities in the index here. And then after that, I think we'll start to see it slide a lot faster. So that's the interesting part of this. Again, home prices seem to are generally sustainable for the time being, but there are significant variations in year-over-year rates on individual cities. Again, as they mentioned, Seattle's home price index is now 1.2 lower than it was in May of last year, and Vegas is still 6 points above what it was the year before. So we're seeing, I think, shifting of people shifting of buying power and purchasing. Again, if we're seeing less and less, in the West Coast, it's kind of moving inland a little bit. So certain cities are going to see upticks, where other cities are going to see some drops. Which I think it's just going to be one of those, things are changing, and it's going to balance out over time. But again, I do believe that this is kind of significant and important that we've seen our first major city with a decrease. So I will post this in the comment section, the about section of the video, so you can actually get the link on this. It's a 10-page document that you can look at. Now, I always look at where we are on the Case-Shiller Index with respect to the last peak. So the last sort of peak of real estate just before the last housing bubble burst, crash crisis. So in the boom part was national index was 2006. I believe it was July or 2006, the peak. So where we are from the peak today to where we are today, we are 13.6% above the 2006 peak. So the 2006 peak is here, we're up here right now. So there's a little bit of an extra cushion there. And, obviously it's about a 56% trough to peak where we are. So it was 2006, it troughed out, 2011, 12, and we're up to 13% over here, but we're up 56% from the trough. So fairly substantial, and that's from a national perspective, which I'm sure you'll find interesting. If I take a look at what's going on with respect to the rest of the country, what do I got here? Very straightforward. Again, this is the 20 Composite City Index, and you're seeing, relatively minor increases. You're seeing Atlanta with 4.7%, Boston 3.6%, Charlotte 4.5%, Chicago 1.6%, Cleveland 3.6%, Dallas 2.6%, Denver 3.6%, Detroit 4%. Again, Vegas leading the pack with 6.4% year-over-year increase. LA 1.9%, Miami 3.3%, Minneapolis 3.6%, New York, this would be New York City 1.9%. Again, Phoenix up there 5.7%. Portland 2.4%, San Diego 1.3%, San Francisco 1.0%, Seattle negative 1.2%, Tampa 5.1%, and Washington 2.9%. So that kind of rounds it out. So we're seeing the majority of the cities are on the lower end, 3-ish, 2-ish, ones and negative, and those top three are the ones that are over 5% year over year, which is interesting. Now, again, if you start looking at what's happening here, so when you have, you've got your Portland 2.4%, San Diego 1.3%, San Fran 1.0%, and then Seattle negative 1.2%, you can see the West Coast is starting to probably slide a little faster than what's going on in the rest of the country. That's just, I think, natural because, the higher the appreciation historically, you'll see the change in, when it goes the other way, a little faster as well, too. It'll be a little more dramatic. So that's a scoop on that. So, again, Case-Shiller, 3.4% year over year across the board. That's slowing down every month, and the trend will continue as time goes on. All right. Also, what came out today from NAR, which is National Association of Realtors, is pending home sales. So, they say pending home sales rebound after 17 months of consecutive declines. And so the National Association of Realtors puts out that information. And I guess what they have here is they actually have a pending home sale index. So, and this is based on their index. So you could say that the pending home sales pushing the index forward 2.8% for June as opposed to May. So we saw a little bit of uptick in the pending home sales that happened in June, and realize that, what are pending home sales? Well, very straightforward. Forward-looking indicator of contracts signed for real estate deals in June. They're not closings, they're not sales. So, X number of contracts were signed. Those expectations are going to, close in July and August, most likely, maybe some in September, but really it's July and August when the closings typically would happen, and then we would see that reflection possibly in the sales information going forward. But put this in perspective though. So we saw a little uptick in June, obviously with the pendings. Now I look at this going, this is where we're going to see upticks because you put a contract on a home in June, you close in July and August, you move in, and then guess what? Fall hits. Kids are going back to school, people are getting all set up, and they're relocating over this time frame. So this, to me, is where things happen. So seeing a little bit of a rebound is not, I think, too significant at this point in time. Again, it's not like 8% or 10% or 12%. It's 2.8% off their index. But when you look at things year over year, NAR indicates that the year over year contract signings are only 1.6%. So they have their index, but when you actually look at the true year-over-year, true numbers, 1.6%, which ends a 17-month streak of annual declines. But again, 1.6% year-over-year. So it's not like the market has suddenly taken off and everything is great. This, I think this number may hold or slightly increase in July, and then and probably the same in August, and afterwards it's going to drop again because people are buying and selling over the summer season, and when that's over, it's over, folks. So changes. It looks like the West had the biggest increase on their indexes. You know what I mean? So 5.4%. The South increased 1.3% from the index. Midwest 3.3%, and the Northeast 2.7%. So again, we're seeing relatively small increases, but nationally nothing. 1.6% year over year is nothing to write home about. So there you are. Of course, the NAR is stating the fact that stock market job growth is doing well. Stock market's at an all-time high. Home values are consistently increasing. We combine that with incredibly low mortgage rates. It's not surprising to see an increase. Well, again, these are not increases to write home about. I mean, you saw a small uptick. It's not like the market's rebounding and it's going the other way. I think this is a short-term little uptick, as I said, based on the seasonality. So there you go. So that's a scoop on that. Nothing to write home about as far as I'm concerned. And just to kind of sort of put this into perspective, we're seeing slower sales. We're seeing declines in value appreciation. We had our first decline year over year with Seattle, which is interesting. America's rental market heats up as its housing markets take a breather. So again, Zillow puts out their information on rents and what they see. And essentially, according to the company's real estate market report, U.S. rent prices accelerated for the ninth straight month in June. The average apartment cost typical renter $1,483 a month, translates into a 3% annual increase, and that's rent is now up in 49 of the 50 top markets in the nation. And again, these numbers are Zillow's numbers are consistent with what we've been seeing with other sort of websites and studies that are going on, saying we're seeing about 3.5-4% increases on rent, sort of, for monthly or year over year. So seems to be sort of plodding along a little bit there. So that's the scoop. So again, rent will continue to go up, and housing prices are trying to stabilize. So we'll see. I know having rent go up is harder for people to save money for down payments, to get mortgages to purchase the homes that they probably can't find anyway. So again, just sort of showing we're at this weird situation here with respect to real estate. My opinion is the fact that it's not happening fast enough. We look at this every day, and you want it to happen. It's going to happen, just a matter of getting there. So for us looking at it every single day, it seems to be going at a snail's pace. But this is what happens. We've peaked. We're still showing some price increases, but again, those increases are smaller and smaller in the large cities. And again, as I mentioned earlier in the year, this is what we're sort of seeing right now, that we're probably going to see a little bit of growth or increase because of the seasonality. Once this season's over, I believe we'll really start seeing some slowdowns. And information I'm getting all over the place now. It's people are saying I'm looking at price reductions all across the board. So if you're a home seller and you've missed the mark here with respect to I need to sell my home and my home was listed in May or June, didn't get an offer, what are you doing now? You're reducing price. So I would expect that going forward, people who are not under contract will be doing the price reduction scene in order to get stuff moving, and that's what's going to happen in real estate. That's going to start the flow of, and those will become future sales, which will be future sales with lower values, and you'll see that erosion sort of happening in the near future. So that's a scoop on that. Again, not a big news day today as far as the volume of the content, but I still think the quality of the content is important. All right, that's a scoop. So anyway, guys, appreciate the views, appreciate your comments. Please like the video and share the video if you can. And again, if you're not a subscriber, please subscribe. Help my channel grow. I really appreciate it. If we're communicating, I know I've reached out to a lot of people. Some people I'm waiting to hear back from. So certainly connect and we'll talk. I am working on a new, I guess you could say, training program that I'll mention in the comments. It's my Never Pay Retail program, which I think will serve this marketplace really well. It'll give everybody sort of tips, tricks, and techniques on real estate from both a retail buying perspective and a investment perspective, and actually blending some of the two that you may find valuable in your future house search, etc., etc. So again, thank you very much, and we'll look forward to talking to you later on this week.